Good afternoon, everyone. Thank you, Richard, very, very much for that warm introduction and for the ability to come and speak here today. It really is great to be speaking at an event that connects the superb financial ecosystem we have here in the UK with investors of all types, from the most sophisticated and experienced to those just starting out on their investment journey. And in particular, an event which champions those firms that are excelling in innovation, new products and customer service, as we'll be hearing about during the awards ceremony that will follow immediately after this. When it comes to investing, trust is absolutely key. Our own motto at the LSE is Dictum Meum Pactum, which for those of you who aren't fluent in Latin, just like me, means my word is my bond. Events like this one at their core seek to build trust and nurture that trust that keeps our very markets here in the UK going. Whether that comes through an investor having the opportunity to meet, speak and ask questions of the brokers, platforms, fund managers and listed companies joining the London Investor Show today, or whether it's through investors learning something new, helping them to build the skill sets and know-how they need to trust our markets, or by rewarding the firms that are truly enabling investors to make smarter decisions about how to manage their own money, as is recognised by the Good Money Guide Awards. Seeing the turnout today is a really fantastic testament to the UK, and it shows how many people care about their financial well-being and are actually prepared to do something about it. That's the culture that we used to have across the UK decades ago, when people up and down this country proudly invested in the companies that they believed in, benefiting from the growth that those companies delivered, whilst allowing people to feel that they had a genuine stake in the UK economy. That investment culture is one that the UK now needs to rebuild, and one that we at the London Stock Echange are doing everything we can to make sure that it happens. As a country, the UK is increasingly asking people to take more responsibility for their own financial futures. The days of a guaranteed pension scheme are unfortunately long gone for the majority of the population. Today, the majority of the UK save into a defined contribution pension scheme. One could argue that should really be called a tax-efficient investment account rather than a pension, because the rewards you get from it are solely dependent on the money you put in and the decisions you make as to how it is invested. Or they may save into an ISA, and again, knowing how to invest those funds is critical to the returns that they get back. And so if we're going to ask people to take that responsibility for their own financial futures, it's critical that we provide them with access to the education, the advice, and the tools that they need to properly discharge that responsibility. If we're able to do this, then building that investment culture is not only good for individuals, it's also good for the country. Companies will have greater access to capital, allowing them to grow more quickly, to generate more growth for the country, and also returns for the population. Through that process, the population become more financially sophisticated, and around the flywheel goes. Unfortunately, at present, we don't see enough retail investor participation in the UK capital markets. Barclays recently published a study, and it showed that there is currently £430 billion of UK consumer savings that's held in cash by 13 million individuals. One could argue that at least some of that money could be invested more productively to generate growth and returns. It's worth noting Barclays actually took a fairly conservative approach to that number. The 430 billion only relates to cash held by individuals with savings greater than £10,000 and after deducting savings equivalent to 6 months' worth of income. So much of that money is genuinely investable money. If we compare the retail investor landscape in the UK to that in other countries, a quite stark picture emerges. 40% of the US stock market is owned by individual investors. In the UK, that figure is about 10%. In total, only 11% of UK households directly hold stocks and shares, which is around 50% less than it was 20 years ago, and much less compared to countries like Sweden at 22% or Australia at 21%. The Investment and Savings Alliance says that over 70% of people holding large cash balances who have not invested in stocks and shares ISAs have never even considered doing so. That is why an event like this one today is so important. Not only is the UK sitting on a huge source of investable capital, but even the FCA has recognised that in the long term, the potential risks to consumers from not investing can be higher than the risks that come from making financial investments. It suggested that this apparent fear of investment is largely driven by issues like difficulties in identifying the type of financial investment product, or the inability to make simple side-by-side comparisons of specific products within an investment type. But it's also partly driven by the risk aversion that has built up in the system over decades, often through entirely well-intentioned policies and regulation, but which have had often unintended consequences. I am delighted to say, however, that this is now starting to change. There is now widespread recognition across the government, regulators, the London Stock Echange and the ecosystem that retail investor access to markets is absolutely critical. We've seen the FCA make detailed proposals as part of the advice guidance boundary review to help to broaden access to the financial advice many investors want. Only 8% of adults in the UK currently take financial advice. We hope this percentage will grow in the years ahead. On the London Stock Exchange, there have been a series of regulatory changes made to allow retail investors access to capital raisings by listed companies directly and in real time. In 2019, not a single equity capital raising by a FTSE 100 company included a retail component. However, since January of last year, that number has been 100%. That same number has been 67% for all companies across the main market, and it's been 50% across all companies on AIM. These capital raisings are typically conducted at a discount to the prevailing share price, so it's really important that retail investors can access them on the same terms as larger institutional investors. Another example, currently a listed company cannot offer more than £8 million of its shares to retail investors without triggering the need to produce a prospectus. That's a costly exercise, and it means that retail investors it doesn't make sense to include them above that level. This significantly constrains the ability of retail investors to participate. The FCA is currently reviewing the rules regarding prospectuses, and we hope that cap is going to be removed. We often talk about the equity markets, but let's not forget about the debt markets as well. In size, they are far, far larger. Again, it's never made sense to us that a retail investor can buy a share in a company but not a bond. Last time I checked, bonds were higher up the capital table than equity and therefore theoretically safer. Years ago, the UK was home to a vibrant retail bond market. Where and why this stopped is not for today, but UK regulatory changes are now in train, informed by constructive discussions between market participants and the FCA, to lay hopefully the path to bringing retail investors back into the UK corporate bond markets. Imagine being able to buy a bond in AstraZeneca, GlaxoSmithKline or Rightmove. I should say at this point other companies do exist, as easily as you do a share on the London Stock Exchange through any one of your retail broker accounts. That's what we're hoping to see in the years ahead. As individual firms, it's also incumbent on us to identify what we can do differently in our own firms to increase the participation of retail investors in the UK. In the last year alone, we have waived all trading fees for retail orders on the London Stock Exchange. So that means if you're now a retail investor and your broker is trading shares on your behalf on the LSE order book, they'll no longer be charged a fee by the exchange. We've also made our live market data available to retail investors. So again, that means if you're a retail investor and your broker provides you access to real-time live LSE market data from January, they can do it for free. If they're charging you a fee, you should query it. And we're working on reducing costs further along the investment chain and making our markets even more accessible than they've ever been. And I'm hopeful that we'll be making more announcements on this in the months ahead. We also really understand and believe in the importance of financial education in supporting people's investments journeys. That's why we've now produced a retail investor series, which will be released in the weeks ahead, to help improve people's understanding of trading on the LSE's markets and will complement the excellent content already produced by some of the firms that are here today. The content will be available for free on the LSE website and through our Spark Live service, which for those of you who don't know, is a webcasting platform that gives access to hundreds of companies' annual general meetings and performance updates. Again, made totally free for retail investors. So we are fully committed to see a renaissance of a shareholder society in the UK. And one by one, I believe we now have the right building blocks in place to make that a reality. So thank you again for having me today, and I wish the best of luck to all those that are nominated for the rather large number of awards that we are about to see. Thank you very much indeed. There's some incredible companies listed on the London Stock Exchange. So we've got about 1,800 companies listed on the exchange.
from world-leading healthcare companies to fintechs to high street retail brands, banks, incredible plethora of companies. The UK capital markets are the third most active in the world year to date, so US, India and then the UK. About £4 trillion of companies listed on the exchange. So a huge variety of choice for people. But also it's important that people in the UK feel that they've got a stake in their own economy. That they feel that they can invest in businesses up and down the country that are driving growth and jobs in the economy, and that connection between the public and their capital markets is really strong. I think the importance of this connection between the British public and the capital markets is one that's recognised by the government, the regulators and the LSE as well. And so a lot of the regulatory reform that's going on at the moment is focused on trying to remove barriers to allow retail investors to participate in the UK capital markets. So we're seeing all of the barriers essentially being removed to really encourage that participation. So you'll see more retail investors being able to participate in primary capital raisings. We're looking forward to hopefully seeing retail investors being able to participate in the bond markets for the first time. You've seen announcements from the government to make financial advice more easier to receive as retail investors. So there's a whole series of changes trying to ensure that people can access regulated capital markets in the UK.